Well, time now for our weekly featured business segment. We're looking at a company that has grown from very small beginnings. It's also helped other businesses grow as well. Scottish Pacific Benchmark is the largest debtor finance company in Australia. Business Channel reporter Emily Mittyhumer spoke with the company's CEO, Peter Langham, to find out exactly what debtor finance is.
It's basically a working capital tool for businesses, and it's basically an overdraft secured against trade debts rather than against bricks and mortar.
Sure, and where do you usually find what types of businesses need it the most?
Most companies that we provide finance for would be the owner-managed companies. They don't have easy access to capital, and so they'd be the family-owned business, usually growing, looking to take advantages of opportunities, and just don't have the bricks and mortar security that the banks require.
And what do you think are some of the biggest hindrances to growth in small businesses? From your experience?
I would say working capital, but also good management, to be quite honest.
How did you manage to grow your business to the size it is at today?
Benchmark was started 10 years ago, and I had a plan and a vision. That vision changed many times over 10 years, but it's been a long process. Parts very quick and sometimes slower, but it's a long time.
Sure. And what were the main avenues of growth? Like, how did you manage to grow? Did you have to merge with somebody else? Did you have to take on investors, or...?
Taking on investors was very important to enable us to grow. We grew from a base in Western Australia to go national, and with investors and the right funding we were able to go for growth, feeling confident that we can finance it, and that saw us grow by 50% in one particular year. And then we merged with Scottish Pacific just over a year ago, and that created the largest specialist in our field.
What do you expect for the year ahead? Do you see more businesses that might need debtor financing?
There will be more businesses needing our finance. Some because the banks are tightening their credit, some because they see opportunities in today's market. But it's going to be a tough year for us and for some of our clients who are going to see their sales drop and hurt a bit, yeah.
And how do you manage to raise the capital to lend to your clients?
Basically, we have credit lines from two major banks, Australian banks, that fund our business, and capital from investors that supports those credit lines. And over the years, I've had various investors and various funding lines from banks, but now we're sort of well entrenched with a couple of large banks. It's a lot easier for us.
Are you having any problems with raising capital at the moment?
Not for us, no.
With terms of payment blowing out to all-time highs at the moment, is this a time when you see a lot of businesses needing more debtor finance?
Not really. The debt turn has blown out to an all-time high, but it's only by a few days. The people that are coming to us now, we're seeing the largest demand, is just these people that are seeing banks tighten credit and restrict cash, and people that are seeing opportunities and not being able to take advantage of.
What have been some of the biggest challenges for you in growing your own small business?
Coming to accept that cash is king. Always in the early days doing capital raisings, refinancing, dealing with banks, and very time consuming. And until we got a major investor on board and adequate funding lines for long term, our growth was fairly slow. But as soon as we established the right cash flow, the right funding, we were able to go for growth.
Okay, great.
And that's all we have time for in this edition of Moneymakers. Remember, if you have a question you'd like to ask us, you can email at yourmoney@skynews.com.au. I'm Nina May. Thanks so much for your company.